Can you become and stay a successful trader using just a simple strategy? The answer coming up in this video. Hi, this is Lode with Black Bear Dog Trading, and in today's video I'm going to address whether or not you can actually be and stay a consistently profitable trader with a simple trading strategy that you can apply to any type of trading, be it forex, commodities, stocks, options, whatever. What you see in front of you here is a 1 hour chart, and I have nothing on here but price. I have the chart shrunk down to the second lowest level. I don't use bars, candlesticks. I merely use bars. I'll show you. If it were candlesticks, it would look like this. I merely use bars. Doesn't matter. You can use either or. You can even use a line if you like. It doesn't matter. How can you trade this here and basically make money with this? There's nothing on here. Well, there is a concept called trading price, which means that you monitor where price is going up, down, and you have a support level right here and resistance level right there, and based on all that, too complex, especially if you're just starting out and you really don't have yet a good grasp on how price moves and what stop losses are and what highs and lows and all these things are. My earpiece keeps falling out. Sorry about that, guys. There has to be a simpler method. There is. And this method that I'm about to share with you today is the foundation of the trading strategy I use today. It hasn't changed much. In fact, it's pretty much still the same thing, except that I use a bot, or I automated the process to do my analysis. Other than that, it's pretty much still the same. As you see, I have nothing, no indicators, nothing. So let's get started here. First thing I want you to do is, and by the way, the configurations that I'm giving with you will work on any platform. I happen to use MT4. This will work on TradingView. This will work on Thinkorswim. This will work on any platform. So I go to my indicators list. I go to oscillators. I take the commodity channel index in oscillator, or CCI. The default period is 14. I set this to 50. The color, you change it to whatever you want. Typical price, leave it as is. Now we click on levels, and you have minus 100 and 100 or plus 100. The reason for these levels are that the commodity channel index indicator, or CCI, is an overbought, oversold indicator. And the way it is normally used is if price dips below 100 and now makes an upward curve, it would be a good time to consider a buy position. If price is above 100 and makes a downward curve, it would be a good time to consider a sell position. Too much involved, we don't want that. Besides, we're not going to use this indicator that way anyway. So what do? Click on the first one, on delete, click on delete again. Now click on add, and we have 0, 0. Again, change color, change lines to your preference. Click on OK, and this is what you got. And now it tells you right here that your CCI is at a period of 50 with a 0 baseline, and that is it. Now, this is all you need to do your trading and be successful at it. How does this work? Well, we look at when price goes above the 0 line or the baseline, you consider a buy position. When price goes below the zero line or the baseline, you consider a sell position. If you are in a buy position, you stay in the buy position until the CCI dips below the baseline. If you are in a sell position, you stay in the sell position until CCI moves above the baseline. It's that simple. So how would this work? Well, in this case, the CCI has all, let me put, by the way, the crosshairs easier to see. The CCI has dipped below, and at this point, I would have taken a sell position right at this level, about right here, which matches with my CCI dipping below the zero right there. So the problem is, for now, the CCI has already made a serious move below, so I'm not going to enter, because there is a chance that not only as it is already slightly retracing, but it may completely retrace above the zero. So I wait until I get a signal that the CCI just went above or just went below to take my position. Does this work? Well, let's go a little bit backwards and see. Again, I'll use the crosshairs so you can confirm. Here the CCI went above the baseline. I would have taken an enter position, and I would have had a beautiful run all along until the CCI went below the baseline, and in this case it went below right here, which my exit point would have been about right here. That's where I would have exited my trade. Now, of course, not every single trade you take here is going to be a winner, obviously. Trading carries with it that you can lose money, and there isn't a single trading strategy that is absolutely 100% fail-proof. Doesn't exist. So that's it. Does this work? Yeah, it does. And it works as well for the down as it works for the up. Let me give you another example. Let me get rid of this here, of these markups, and show you another one a little bit sooner. I'll put the crosshairs on again. Here we are. The CCI dipped below zero right here. It matches up with the price right here. At this point right here, I would have entered a sell position right here, and I would simply stay in the sell position until such time that the CCI moves back above the zero line, which is right here. And basically, bottom line is, I would have exited the trade right here. It really is that simple. That is all there's to it. Now, the reason I made the bot to do the analysis is because at times it's a little difficult to tell whether price dipped below the baseline or above the baseline, because again, the concept is not that it hovers on the baseline and you exit. It must be below or above to enter and below or above to exit. And as you can tell in this case right here, my eyes are not that good, and I can't really tell, is this below or is this above? Should I then exited my trade or not? So I know for sure here it's below, and I could have exited my trade here, but would I have saved a few pips and with it made a little bit more money if this is below and then I would have exited it here? Who knows? Like I said, that's why I created my bot. It does this type of analysis for me. A computer is much faster at determining this, is also much accurate, more accurate at determining this, and I don't have to sit there, strain my eyes on where am I here. Here is another example where it's on the baseline, or is it below? I really don't know. Here's another one. So they appear quite often. And here's another one. And, you know, to have to strain myself to figure that out. That's where the bot comes in handy. The bot doesn't do the trading for me. It does not open a position and close a position. It merely tells me where the CCI signal is and the opportunity for a buy or sell position. And based on that, I make my own decision and I manually enter a buy or sell position. So this is the whole strategy. It is merely when price is above baseline, you enter a buy, you stay in the buy until price goes below. So here, let's do this so you can actually see this. Price goes above baseline, you stay, you enter a buy position, you stay in the buy position until price dips below the baseline. That's when you exit. Same for the sell position. When price dips below the baseline, you enter a sell and you stay in the position until price moves above the baseline. And it's basically a rinse and repeat. Now, this is the 1 hour chart, and the 1 hour chart does have a few false signals that they're too close together. They're not necessarily false, but they're too close together. And a prime example is like right here. Okay, that's a good one. Here is another one. So what I mean with too close together, they go above, but then they dip below, and then they go right back above, and then they dip below again, and it usually coincides with when the market is ranging. In fact, almost always. You see, so with the 1 hour chart, unfortunately, you'll get quite a few of those. And so while you're trading an hour per bar or per candle, you may still make some money, but the chance that you lose is equally there. So now, what you can do instead to minimize that is move on to the 4 hour chart, and now the signals are clearer and the bouncing up and down are a lot less, and they're also much more visible now, where you have your exit and your entry points following the exact same logic. Price dips above, you enter, goes above, you enter, price dips below, you exit buy. Price dips below, you enter sell, price goes above baseline, you exit sell, and it's a continuation. Now, for a very good signal that you can easily follow with very few losses actually, is the daily chart. And now you see this is very obvious right here. So at this point in time, price is starting to hover towards the baseline. Once it's below the baseline, the moment it dips below, I usually give it 5-10 pips further down, just as a confirmation, so to speak, and you enter a sell position. And I stay in this sell position until price retraces back above the zero line. It's really simple. And again, with the crosshairs, you could see where I'm at. Right here, price went below. An entry would have been, let me draw some arrows. Price went below, right here. An entry point would have been right here. And I would have had continued to go until price went above, right here. And that would have been equal to getting out right here. That would have been a really nice run, considering this is a daily chart. Look how far this went. Pretty good, if you ask me. And it repeats that process over and over. Here is a very long run, and just so that you understand it clearly, let me show you again how well this trade actually works. I'll put the crosshairs again just as confirmation. The price dipped below here, so I entered a position, sell position. I entered a sell position right here, which matches about right here. I stay in this sell position until price goes above See here, it is not above. It's directly on the baseline. It has to be above. Price went above here, which matches here. Here is where I exited my sell position. And look at the mega trade that I have right here. And that is on the daily chart. So, I mean, that ran for quite a while, and I made some very handsome profit with it. Again, the same goes for the buy position. Buy position went up right over here. It went over and above the baseline. I entered, and then it retraced back down, and it went below the baseline. So again, because this is a daily chart, I made a tiny bit of money because I entered here. It went up, it came back down to just above where I entered, and I made still some money, but nothing to brag home about. But then came the second signal right here above the baseline, and again I took the trade and I let it run until it went right here below the baseline. And again, on the daily chart, I had a nice run. We entered here, which matched with being right above right here. And I just let it run. Even though this dip came, it didn't go below the baseline. I let it run. And I went and went and went and went. And here it went below the baseline. I went out. And here it went below the baseline. I mean, price where I exited my sell position. It really is that simple, and it really is rinse and repeat. And if you just do this one trading method and nothing else, that will produce results for you, positive results. There are two catches. One, don't look for an entry when there isn't one. Follow the rules of the trade, stick to them. And number two, be patient. It's going to take time. Look, this is a daily chart. We're not going to go from here to here unless there is sudden negative economic news or something that will push this down. Volatility will all of a sudden jump up, people get in panic mode and start selling off. Otherwise, this is a daily chart. This is going to take a little bit of time to get you there, but you can do this. Just wait once it gets below, and you're ready to enter a sell position. Now, for visual, I do recommend that you do one more thing to this, and again, this is only for visual aid, making it a little easier to see things, and that is by adding I'm on the wrong one here, by adding a moving average indicator. The same as the oscillator, it's set to 50, no shift, it's simple, it's closed. Take again what color you want, what thickness of line you want, click on OK, there you go. And now it's a lot easier to follow along, because now you see right here price is above the 50, this is the CCI is above 0, enter. And watch what it does. When you follow this along here, price continues to stay above the 50. Then takes a downturn, and once it gets below the 0, it's also below the 50. Double confirmation, get out. So it's a very simple, very straightforward. You already have my bot to do your analysis for. This is how I trade. This is as simple as it gets. Personally, I don't know of a more easy or a simpler routine. All it takes on your end is consistency, diligence, patience, and don't bother jumping the gun by looking for trades that don't exist. Don't get antsy. You know the story. I keep repeating it over and over, but it's true. So yes, to answer the question, can you be a successful trader with a simple trading strategy? The answer is yes, you can. Here's the strategy. Apply it, use it, and you'll do just fine. By the way, I want to show you one more thing. I'm going to go back to my hour chart, and even though I have price already dipped quite below to the point that it's probably continuing downward now, perhaps not, I am still going to enter a sell position only to show you what I do next. So let me move myself a little higher up here. I go here. I usually trade 10% of my account, which in my case is 1.25 lots. I click on enter a sell, and here we go, I'm set. Of course, because this is not future Forex, but it's spot Forex, you always start out in a loss. Brokers need to have their cut. It's just how it goes. So now, at this point in time, I enter the trade. I now want to run this trade until this goes back above. But still, I want to be sure that if it goes back above till I exit, should there be a sudden unexpected market reversal that I'm currently not counting on, that may literally in seconds go this way, I'll lose my shirt in this trade. So obviously I don't want that. I want to have a stop loss, and to do that is very simple. In MetaTrader 4 it is. You don't need any special indicators, you don't need any special stop loss parameters, nothing. All you do is move to your entry point and watch your cursor change to a double arrow, vertical arrow. Put your left mouse button down, drag the line upwards until you are just above the most recent high. Release your mouse button and your stop loss has been set. It tells you right here, SL stands for stop loss. Now at this point in time, you just let this puppy run. And like I said, only thing you do is monitor it for when it goes above the zero line, and then you exit the trade, and that's it. What is very nice about this method is that you can easily set this up on your cell phone as well. Download MT4 mobile, log in with your trading account information, login information, and set it up just like that. Make sure you use the exact same time frame as what you use on your desktop, and set the CCI on your mobile with the same period setting. Install a moving average with the same period setting, and you're done. So you don't need to be glued at your desk. You can go about with your business, and you can just monitor on your cell phone where you are with your trade. And this, should it come to the point that price moves back up above the zero line, so a signal that you should get out of your sell position, then you can easily close that directly from your cell phone. So it's really that simple, it's that easy. So I wanted to share that with you, and I wanted to tell you that yes, you can be a successful trader using just a simple trading method. All right, this is it. I'll see you in the next video. As always, take care and God bless.